Bitcoin is down about 45%, and probably more than that. It just moved so much. But when I last looked at it, it was down 45% since its peak in mid-October.
Mm-hmm.
So we're talking about basically, let's call it half the value wiped out of Bitcoin in 4 months?
Mm-hmm.
I think a lot of people have owned Bitcoin for various reasons. A big one is it's supposed to be digital gold, where gold rallies or does well when the stock market is struggling. It's a diversifier.
Mm-hmm.
Now, I think what I've always made the argument is Bitcoin is really a proxy for risk, meaning if risk assets are going up, it's going up. Well, it doesn't seem to be doing either of those things right now. And I think that's one of the main reasons it's getting crushed. Like, why do you own it if it's not diversifying your portfolio? And here's what I mean is Bitcoin is down 45%. The S&P 500 is up about 2-ish% over that same time period since like mid-October. So not up a lot, but up some. And global markets are up even more than that with the strength we've seen in international stocks. So you have stocks that are up. Bitcoin is cut in half. And let's not forget about all this global uncertainty that we keep talking about with tariffs, geopolitical conflicts. There's the Venezuelan kind of takeover that happened since Bitcoin has been selling off. Well, gold's up 26%. Real gold. Like, gold is actually doing what it's supposed to and being a hedge for these risky kind of events. Well, Bitcoin, again, it's not going up like stocks, so it's not participating in risk-on rallies. And it's definitely not helping diversify anything. So why do you own it? And I've always said people own it as a collectible. That's all it is. Bitcoin is a collectible. I personally won't pay anything for a Bitcoin. So, I don't see a value in it. But some people did. And for a long time, it was greater fool theory. I'm going to buy a Bitcoin today because I can sell it higher to someone else.
Well,
I think we're running short on fools now.
There you go, Nate. I mean, look, I've said this about gold. I'll say it about silver. I'll say it about tulips. I'll say it about anything. Gasoline, oil, doesn't matter.
The great tulip crisis of whatever year, right?
Right. It does not have any earnings. Yeah, it does not have any earnings attached to it. So if you are an investor in Bitcoin, the only thing that you're hoping for is more people will want to buy it and sell it so the price goes up. An investor in any commodity has an investment strategy of hoping other people will come in and buy it for higher than what they bought it for. That's it. Supply and demand. There's more buyers than sellers, or there's more sellers than buyers. So here's my perspective on the Bitcoin thing, because it can't be anything other than supply and demand. Okay. First, there's three things that I think kind of all hit either at the same time or kind of sequentially, however you want to look at it. These three things happen. First one, okay. The leveraged traders, so people who are borrowing money to bet big on Bitcoin, okay, they're getting forced out, okay. When the price dips, they have to sell, which pushes the price down more, which triggers more and more selling, okay. And I know this because I can look at it and I can see that the leveraged positions in Bitcoin dropped from 61 billion down to 49 billion. And that happened really, really fast, okay. So there's your supply and demand in action. People had to sell, created more supply than demand. The price goes down. Simple, like sixth grade stuff here. Okay. No offense to any fifth graders that are listening to this. Okay. Now, at the same time, nearly $3.8 billion has flowed out of Bitcoin ETFs over the last 5 weeks. Okay. And that's the longest outflow streak in a long time, maybe ever. Definitely in a while. Now, when that money leaves, fund managers have to sell the actual Bitcoin to meet those redemptions. Back to supply and demand. There was less demand for the ETFs because people were selling it. So the supply, they had to liquidate. That forces the price down even more. Okay. And then finally, liquidity is thin. There's just not many buyers at every level. So even normal selling moves the price more than it should because just liquidity is thin. So again, supply and demand, if there's just no buyers out there, that's what you mean by thin liquidity, right? There's just not a lot of buyers out there. Here's the way to think of it. It's like, there's not a whole lot of liquidity in $25 million homes because not a lot of people can buy them. So when liquidity is thin, this is what happens. Okay. Selling is going to move the price way more in a thin market than in a crowded market. Okay, so this is the story. Leverage unwinds, ETF outflows, thin liquidity. That's the story.